everyone, it's Jonathan here, and today we're going to be talking about the word margin in business. Now, this is a super important word to understand simply because if you're going to be in this game of business, you have to understand the rules. In order to understand the rules, you have to understand the language, right? So if you were to go play some type of sport and you had no idea what the language was, so for instance, say soccer or football, how you say it, right? And all of a sudden, every time you scored something, they say, whoa, you got a touchdown. You're using the wrong language and you're probably not going to be that good at that game. So if you view as business as a game, margin is just one of the languages of business. It's just one of the words in the vocabulary, and it's just part of accounting. My name is Jonathan. I'm a business owner, and I've created this channel to help you out, grow, and teach you the lessons that I learned the hard way so you don't actually have to, right? So let's talk about the actual word margin. I'm sure you've heard in some type of shows, maybe Shark Tank, or maybe you've heard it from some of your friends. Hey, he has how much margin do you actually have in your business? He has a high margin business. He has a low margin business. But if you don't really know what the word margin means, it doesn't really matter what's in front of it or what's behind it, right? So when it comes to a successful business, we'll just keep it super, super simple because that's what we like to do here. You have to understand successful businesses have money coming in as sales and then have expenses, which are money going out. If you run a successful business, at the minimum, you should have more money coming in than you have going out, right? So if you have $100 coming in and you have $50 going out, you have a $50 profit because whatever's left over is going to be considered profit, right? So now how does the margin whole thing come into play? So for instance, in that example, you have $100 coming in, $50 going out as an expense, $50 left over as profit. That profit is attached to the margin, right? So margin is just another way to say, okay, how much profit percentage do you actually have in your business? So the way to do that calculation to figure out what is your margin, you're going to say, okay, my $50 that I made in profit divided by the top revenue, which is going to be the $100, that means it's going to give me to 50% of my margin, right? So in that perfect example, my margin is a 50% business. And 50% margins are super cool when it comes to net margins, right? To take this thing a little bit deeper, you're going to have gross margins and you're going to have net margins, right? So now we understand margins is just another name for profit. And we usually calculate margin as a percentage itself, depending on how much you have. But if you just interchange margin and profit, it's the same exact thing. And profit, one more time, is just calculating money coming in minus the money going out, whatever's left over. So now let's take it to the next level. What is your gross margin, right? So gross margin is calculated by the revenue that comes in or the sales that come in, and then your cost of goods, right? So what does that actually mean? So your cost of goods are directly tied to any of the expenses to you selling that meal. So for instance, if you put rice on it, whatever the rice costs you to put on that meal is going to be cost of goods. If you put lettuce, chicken, whatever that cost of that plate is to give to a person, that's going to be your cost of goods right there, right? When it comes to labor, whatever direct costs your labor actually has, right? So your cook's actually making the food, that goes into your cost of goods as well. So what does that actually look like? So say you sold a $100 thing. It takes you $25 to actually produce that thing. So that means you're going to have $75 left over on your gross margins, right? Now, after you have your gross margin or your gross profit, now all your other expenses that you have in your business, like for instance, repairing the toilet, paying for the rent, paying the cable bill, paying the utility bill. Those do not have direct expense line items directly to a new sale. It's not like every time you make a new sale, you have to pay more money in electricity because the lights have to be on, right? So all those things in rent and stuff like that, those all fall down to the net margin itself, right? So in this simple example, you made $100 in sales. It cost you $25 to actually produce that product or that service, right? And now you have $75 left over. In those $75, you have to be able to pay all your other expenses, like rent and all that other stuff, right? So by the time the month is done, you're going to have, say in our example, you spent another $25 there, and now you have $50 left. So in this case, you had 75% gross margins, and then you had 50% net margins, right? So that kind of gives you the example. After the gross margin side, you had $75 left over, which means 75%. And the net margins is the net, which means the bottom of the P&L statement itself. And that's after all the expenses are done, how much money is left over, and that's 50% margins. Now, what is a normal margin for a normal business? Every industry is going to be a little bit different. The rule of thumb is the higher the number, most of the time, the lower the margin percentage, right? So for instance, in the restaurant business, you can have a lot of different moving parts, but an average restaurant will be anywhere from 5 to 10% net margins, which means if you have a restaurant that does $1 million a year in sales and you have 5 to 10% net margins, that means you're only going to be making anywhere from $50,000 to $100,000 per year after you've produced $1 million of actual income, which is kind of crazy, right? So after all expenses, you'll have anywhere from $50,000 to $100,000 a year in that example. Construction businesses also have lower net margins depending on what type of construction that you're actually in, right? So in that case, you're talking anywhere from that 10 to like 12% net margins as low as 6. So you can do high volumes, but at the end, you're going to have on a percentage basis a low net margin, right? And that just makes sense. Imagine you're running a $200 million company and you have 14% margins. That's a much big difference number when you have a $1 million company and you're doing 14% margins. $1 million company with 14% margins, you're talking about $140,000 a year, which is pretty good. But now you're talking about a $200 million company at 14% margins or 15% margins or whatever that is. You're talking about a 20 plus $1 million profit per year, right? So those numbers are how that changes. Now, the more into the service industry you get, the higher the margins you actually do have the ability of getting, depending on what your actual costs are, right? So if it costs you a lot to actually service the customer, your net margins are going to be lower. So when it comes to deciding, are you in a good company or in a bad company, what's happening, should you be in an industry that continues to grow, net margins have a huge responsibility for all of those things in a business, because at the end of the day, people are in business to make money. And if there's no money left over, that means there's no money for you to get raises if you're an employee. There's no money for you to expand your business because everything's running on a super thin edge, right? So you want to make sure that you're in a business that actually has enough healthy net margins in there so you have the ability to make mistakes, because everyone's going to make mistakes. But if you're running at a 5 to 10% net margin, right, for your business, and you make 1 or 2 mistakes, that could be the difference between you making money and losing money that year, right? If you're running at a 50% net margin in your business, that means if you make 1 or 2 mistakes, you can make the same exact mistakes as a guy doing a 10% net margin, but you have enough buffer zone where you can lose some money and still be okay because you're going to be making a good amount of money still after your mistakes, right? So those are the different ideas to have when it comes around margin. I hope this helped you out. It took me a while to understand this, and hopefully I broke it down for you. Put in the comments below. Let us know, do you want high margin, net margin, and what is the margin in your industry? Thanks. Have a good one.